Welcome back to another video here. That's not my intro. My intro is Hello Wolfpack. I don't know why I said it right, guys. Anyway, welcome back to another video. We are back here on Bitcoin. We're going to be talking about the FOMC, sorry, I say it wrong every time, FOMC decision, which is the rate hike decision coming up in around, well, let's check the countdown here, around 15 hours from time of me filming this video, probably around 14 hours by the time the video gets out. And we're going to be looking into the probability and what that means, and also a few other things that complicate it a little bit, including Bitcoin's correlation coefficient with other assets. Now, before we get into any of that, that obviously is the main part of the video, but before we get into any of that, we need to look at some of the stuff we've been looking at generally on Bitcoin, just to give you a quick refresh, quick update of what my opinions are and what I think is going to happen, and also where we are on the shorter term as well. I think the best thing to start off with would be the shorter term, because the shorter term, of course, is what everyone is interested in, going into a short-term event that's going to lead to volatility in the short term. So what we have essentially on Bitcoin is this. On the hourly chart, for example, we have a descending broadening wedge formation, which is typically a bullish formation, typically breaks the upside. We saw a deviation, right? We saw a fake out below. That was due to something that Joe Biden said. We pumped back up soon after it was cleared up. He made a claim that the US would get involved in an invasion of Taiwan, and the officials came out and said that was incorrect, and so we pumped back up within the wedge. So just ignore that. Don't worry about that. Act like it didn't happen. Essentially, we're still within the wedge here, still a bullish wedge, still have a positive divergence on the MACD, and still have a bullish MACD cross coming in shortly. Now, the only problem with this is this, right? The only problem with it is this. Yeah, look, it looks okay, and I kind of went over this in a post yesterday. It looks okay from a technical perspective on the hourly chart, for example. However, you know, there are things we need to be questioning, and one of those things that doesn't look too good is the fact that we saw, and this is 19.5K, this red line, 19.5K. That is, of course, the 2017 all-time high on Bitcoin. And the reason why this is bad is because we actually came up after breaking back within the wedge, and we rejected from 19.5K, right? So we actually performed some sort of resistance support flip from a major level. You can see how strong this was holding for support just a couple of weeks ago here. So yeah, no, not good situation for Bitcoin there. So yeah, we have okay technicals, but also we've rejected from 19.5K, and also we have an FOMC decision in about 14 hours by the time this video gets out, which would of course lead to vast volatility that is semi-unpredictable. I mean, depending on what happens, it's semi-unpredictable. So I would recommend to you guys this, obviously, and I say this every time before we see FOMC decisions and CPI, I wouldn't be trading right now, right? Don't trade. I wouldn't be trading leading up to the event. I think it's going to be very volatile. I think there's going to be a rational price action. I don't think it's a good time to get in, regardless of what you think the charts look like. Just wait like 12, wait for a few hours after it finishes, and then you're fine. Then you can start trading again. And I think that's the best advice you can have, because generally speaking, and this is no surprise to you guys, everyone kind of knows this already, but I'm just saying it again, just for people who might not. Generally speaking, even when something happens that you would expect to, make the market go up, for example, maybe it comes in lower than expected, that's bullish, and the market will go up, you might even see a short-term, dump before that happens just to fake everyone out, and then you start pumping, right? So it's irrational stuff. It doesn't necessarily act rationally, especially in the short term, so just keep that in mind. But what are my opinions on Bitcoin? Well, my overall opinions on Bitcoin are very clear. I've made this very clear in previous videos. I'll just say it quickly. I'm expecting a Q4 bottom, as per the 4-year cycle theory. You can pause the video and take a look at this date range trend. I think it's very compelling. And more specifically, I'm expecting a bottom before December. So October, November, and I have a buying plan based on that. And my buying plan is this writing here. I will buy 33% at 17.5K to 18K, and I will buy 33% at 11 to 13K, and then I'll buy 33% at a breakout of this yellow line. If we don't reach the lower targets of 11 to 13K, which is very possible, I think it's likely, I will buy 33% at 17.5 to 18, and then we'll buy the rest at the breakout of the yellow line. And I think, yes, I do think the breakout of the yellow line will lead to a substantial move to the upside that will ultimately result in Bitcoin breaking the downtrend. I do believe that. And if we go to the weekly chart, and we go to this chart here and we make it logarithmic scale, we can get a good idea about where the actual invalidation point for the bear market is. And of course, breaking above that yellow downtrending macro line would put us in a good position to start breaking above some critical levels, like the bull market support band, like the 200-week SMA, for example. And once we break both of those things, we're pretty much open season and we can start testing the actual place. And this is something we need to make very clear. Okay, I will be buying at the yellow downtrending line. However, the actual full 100% confirmed reversal that ends the bear market, because we can break the yellow line, we're still in a bear market technically, the thing that ends the bear market, and this is universally agreed upon by many analysts, is actually breaking 28.6K. And that's very far away. That's 50% gain away. And that's why we're not waiting for that. We're not going to wait for a 50% gain. But I'm just saying, if you're super conservative, that's what you'd be waiting for. 28.6K, that's when you go all in. But, I'm not going to be doing that. I'll buy in lower for sure. But yeah, that's kind of a situation for Bitcoin right now. And the reason I wanted to bring up this situation is because we're at a pretty critical point here. And a lot of things are lining up to make this FOMC decision very major. One of the things that are lining up is the S&P 500 has broken down, but it's come up back to resistance, and it's done a resistance support flip, which is very bearish, and it indicates downside price action, okay? Same thing on the total cryptocurrency market cap. We broke down from a structure, we've come up, rejected off of it, resistance support flip, and indicating downside price action. So two of the most major charts we should be looking at as cryptocurrency investors, the S&P and the total cryptocurrency market cap, have both broken down from, 3 to 4 month long structures. In fact, on the S&P, 4 month long structure, both broken down, and they've seen resistance support flips, and they're, generally speaking, going to be, it's indicative of them heading further down. And that's going into a major decision that has proven to be very important. And we're going to get into that in 1 second here. I just want to go over the numbers quickly. We can explain what this all means. And, what happens if we see a 75 basis point hike? What happens if we see a 100 basis point hike? Well, essentially this, right? The market, and this is something we've covered extensively in the past as well. I've said that like 3 times in this video. The market doesn't care necessarily about the number on a shorter term basis, because the number, the expected number of whether it be CPI, whether it be a basis point hike, that gets priced in naturally leading up to the event. Okay, so we can see we've already priced in 75 basis point. Okay, there's an 82% chance we see a 75 basis point hike. That means for the most part, the market is priced in a 75 basis point hike, meaning on paper at least, if we see a 75 basis point hike, it shouldn't really do much. That doesn't mean we go sideways. It means that whatever the trend is as per the TA continues, okay? So we could very well go down, we could very well go up. It doesn't mean we go sideways. It just means that will have no real, exterior effect, okay? But if we see something like a 100 basis point hike, which is an 18% chance of happening, that's when you start getting extreme downside price action, as it's much worse than expected. If you see a 50 basis point, that's when you get the extreme upside price action. And again, just because we're priced in 75, or we've mostly priced in 75, it doesn't mean we just go sideways after it happens. It means that rate hike wouldn't have a massive effect on what happens to the price action. We could still go up or down. It just means it wouldn't have a massive effect. I would still expect us to go down, right? Maybe not from this structure here, but in general, I would still expect us to go down because I'm bearish, right? I've got a bearish long-term prediction. I think we'll go down. But I'm just saying, for it to have a major exterior, unpredictable exterior effect, whatever, we need to see something unexpected. And as right now, what's expected is 75 basis points. Now, what's interesting about the entire market as a whole here is that there is evidence as per Bitcoin's correlation coefficient to traditional assets. You can see the chart here. There is evidence that Bitcoin's correlation to traditional assets is getting higher and higher over time, which is interesting, okay? Because as cryptocurrency investors, that's not what you want to hear. But this is typical of bear markets, okay? That's something that's very, very important. It's typical of bear markets. We're at the highest level of correlation we've seen since September 2021, meaning Bitcoin is correlated to traditional markets at the highest level it's been since 12 months ago. Now, what's interesting as well is that bonds and the NASDAQ are also in relation to each other at the highest level they've seen roughly for about 7 months. So what this indicates is that everything is getting more correlated to each other. Every asset is acting less and less independently. Why is this happening? Well, it's happening because the assets are relying a lot more on the macro situation rather than their own TA. And this is very typical of bear markets. So this adds even more of a major effect to the major things that are going to be happening, like FOMC in 12 hours, 14 hours, whatever it is, okay? So these events are getting more and more important as we get deeper and deeper into recession. And guess what? That means, and that's good for us, it means that if the macro begins reversing, there will be a violent recovery in all of the markets, and it will all happen together. Whereas if the macro continues getting worse, there will be a violent dump in the markets and it will all happen together. So there is evidence here, clear evidence, direct evidence, not speculation, clear evidence, direct evidence that all of the markets, all of it, whether it be traditional, whether it be crypto, whatever, all of them are acting stronger and stronger and stronger in line with the macro. They're all waiting for the macro to shift. And I think that shift's going to happen in Q4. And that's when we'll see the bottom. So let's see. Thanks for watching, guys. to my YouTube channel homepage and click on the join button, you will see a tab that comes up which shows you all the information of the VIP membership with the Wolves of Crypto YouTube channel. What you get in return for 40 AUD a month, which works out to be around 30 USD a month, is 4 exclusive trading setups per week, which have been extremely profitable in the past. Prioritized reply to comments on my end, a trading psychology lecture, which is extremely useful, and some people have actually said that's the most useful video I've ever made. It goes into a deep dive into the actual mechanics, psychologically speaking, around trading, and then also an exclusive Telegram group access link, which has over 200 members currently, and so you can go in there and discuss the market 24/7 at any time of day. We've got members from all around the world in there, so go ahead and sign up to to VIP membership using that join button there. Moving forward, we're going to talk about BitGet, and this is the exchange we use on the VIP membership. So this is all the VIP members use this exchange. Now, I actually was using this exchange before I had a partnership with them. I was the one who reached out to this exchange asking for a partnership because I genuinely think it is such an improvement on the major exchanges like Binance and Coinbase. Why do I think that? Well, first and foremost, it's got 0 fees on spot pairs, which is saving you a bunch of money. On top of that, it's got 5 times lower fees than Binance on futures trading. So immediately it establishes itself as an extremely cheap and efficient exchange to use for everyday trading and even investing, honestly, if you're investing with considerable chunks of money. On top of all of this, it holds true to the values of cryptocurrency. And it does that by being non-KYC on your end optionally, which means that essentially, all these other exchanges here, heavily centralized. They require you to put your identity in. They require you to kind of, trespass and encroach on the values of cryptocurrency. BitGet doesn't ask you to do that. You can do it if you want to for tax reasons, but it doesn't ask you to do it. It's not mandatory. You can use this exchange globally, and you don't even need to link your identity to it if you don't want to. Now, that doesn't take away from the safety of this exchange, because this exchange actually has a protection fund, and we'll click on the link here. And essentially, they have deposited 6,000 Bitcoin and 80 million USDT onto this exchange to make sure that in the occurrence that someone loses their money on the exchange via a hack or whatever like that, you can make a request here and you can get that money refunded to you, provided it was not the fault of the exchange. So that's very interesting as well. Not many exchanges have anything like that. So go ahead and sign up to BitGet using my referral link in the description below, and you will additionally gain access to a reward center with over 4,000 USD in rewards. And on top of that, adding to the list here, you also get 10 USD dropped into your account straight away after you make your first trade using my referral link exclusively. So go ahead and do that. You're supporting the channel in doing that as well. It's completely free and it takes 5 minutes. Thanks, guys. And then lastly, we've got the Crypto Academy. Now, this is for people who want to learn how to trade. So if you're interested in learning how to trade, I recommend this course. This is a course developed by myself and Megawell Crypto. If we scroll down at the bottom, you can see Megawell Crypto, big analyst in the space. We work very closely side by side, share a lot of the same ideas. We also challenge each other on some ideas. And so we've got 2 perspectives together in order to form this one course. You can go to the website and read the bio. Essentially, it's 10 units. It's very comprehensive. It's very extensive. And it's going to teach you everything you need to know about trading in a cryptocurrency market. And to be honest, any financial market. It's going to teach you how to learn those charts. It's going to teach you the right mindset. It's going to teach you how to find the trades, etc. You can join us here. Go to the website, scroll down at the bottom, and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the rest of the information. Thanks for watching, guys. Cheers.